Yo, what's going on, good people, man? So, we got Tiara here. This is another episode of Monday Night Take. Got my good friend, my brother, Jamil in the house from Asymmetry Trading. Someone I met about 3 years ago now. Super excited for this episode. Got to give a special shout out to my wife. Today is her birthday.
Happy
So
birthday,
super
Queen.
happy, excited. And a lot of you guys know over the past month, I recently became married. So joined the Married Men's Club. Super duper excited. Shout out to all of you guys who have tapped in pretty much here with us consistently on a consistent basis. And this episode really tonight is really going to be the first of a lot of string of episodes that you'll probably see Jamel come on, and some other individuals. But as we talk about, just not just the futures market tonight, but just all across the board, I think there will be a lot of things that you can pull and learn from Jamel. I remember when I first met Jamel, it was actually on Clubhouse, and just kind of hearing him speak, hearing his language, hearing the things that he talked about when it came to not just the futures market, but I think just also from an analytical perspective is very similar to how I kind of grew up and the things that I kind of studied, like analytics, taking a look at the data, the numbers, and asymmetry. We're going to talk about that. Why 3 to 1, you're going to hear a lot of stuff from Jamil. Me and TR, we got a lot of questions for you, bro, so we want to say we appreciate you coming on.
For having me.
And yo, man, this is, we're back on it every single Monday from here on out. Yo, you can count on us to be here. And it was good, refreshing to take the break and all this stuff. So, it's a lot of stuff that I'm gonna be sharing over the next few weeks, keeping you guys posted. So, I just appreciate y'all 100%. So, TR, I'm gonna pass the mic to you, and then with Jamil, we'll let you do an intro and we'll get right into it. So,
All right, awesome. Thank you so much, Lawrence. And happy birthday, Queen. We love you. So, hey, everybody, this is Tiara, owner of Swain Solution Services. You can follow me on Instagram at _Swain Solutions. Connect with me on LinkedIn at Tiara Swain MBA. And I'm so excited. So, whenever Jamil speaks, I get excited because he has a breadth of knowledge. He's going to give it to you straight. Okay. And Lawrence is right. We have a ton of questions to ask you. So, I'm really just excited that you're going to make a big impact to this audience. So thank you so much, Jamil. Passing it over to you.
Awesome. Thank you for having me. My name is Jamil, Coach Jamil. You can follow me at Coach on IG at Coach Jamil. I'm a full government Jamil Abdurrahim. A little bit about myself. Born and raised in New York. Went to Elon University, studied finance at Elon University. Got my master's in economics at UConn University. Then worked for JP Morgan in the fixed income department, in market middle office. And I did that for about 6 years, then transitioning to the credit default swaps desk. Overall, worked for JP for 9.5 years, and then just wanted to transition and just do it for myself. And, trade my own private assets and trade for companies, because initially I did want to trade for a hedge fund, but I didn't have that MIT, background. I just wanted to work for a smaller shop. JP Morgan was a huge shop. I wanted to be able to touch multiple products. And, I wanted to be, touch credit default swaps, work in the credit desk. I wanted to work in fixed income. I wanted to work in private asset wealth management. And it was just tough to navigate all of that at JP. Then, like I said, I wanted to work for a hedge fund, but, I wasn't an MIT grad. And at that time I wasn't into software like I am now. So I just was like, took a leap of faith and was like, let me go get this mentorship and, go off and do it on my own. And I've been doing it, for the past 10 years on my own, just trading my own private assets and trading for funds, for proprietary trading firms and for funds. So, super excited to, just share any information that I have for any young aspiring traders, investors, about the markets, about the global markets, and obviously, the futures market, which I primarily trade. I primarily day trade the futures market, and I swing trade the equities market.
yes, sir. Yes, sir. So we're gonna get right into it, man. Appreciate the intro. I know I was speaking a little bit earlier just about when me and you first met. It was actually in a clubhouse room and just having conversations, and then just started back channeling, and then it was just crazy from there. Picking up the phone calls. I think me, you, and Santino, we even had a couple times where we kind of was just like kind of having our own like little private trading room. A couple times where we kind of just called, just looking at just different levels, whatever it might have been at the time.
Me,
Just those different things.
and
Yeah.
definitely, yeah, and Issa too, man. Shout out to Issa and We Trade, man. You know, you guys really befriended. You guys really befriended each other, and I'm really tight with Issa as well. Known him for 10+ years now. So with that connection, and then you guys going down, with you and having going down to DC, and me being up in New York, I was super excited about seeing y'all linking up together, man. I was like, yeah, this could be something special, man. Yeah, definitely.
Yeah, but it was one of those relationships that really was just fostered from Clubhouse, just another one of those relationships that, really turned out now just being friends in real life, so it's just, just kind of just crazy. So yeah, definitely.
Absolutely.
So,
that used to be a thing, man. Virtual becomes reality. When Clubhouse becomes reality, man.
Yeah.
That's what you used to put on
That's
your
real. That's real.
yeah.
So it just came reality, man. So real life. So it's just crazy. What a great app. So nah, man. So just wanted to get into get into it, and really just ask you. So you talked a little bit before. I think I think a lot of us here in America, for the most part, people have went to school, gotten degrees, and then kind of had like a pivot point, right, where they might have realized, hey, I went to school and got the degree, but kind of want more. I guess I would say the first question that I would ask you, before even get into the futures market, what was like, and I'm just asking, like, was there something that you experienced at JP, right, that made you kind of like want more? Like, and it doesn't not necessarily like a bad thing, but it was something, obviously, you working at JP Morgan, going from Elon University, you've told me stories that you had going to school there, playing football. I mean, then to go into, UConn, we know UConn,
UConn. Yeah.
Just won the national championship for the men's squad. So that was a beautiful sight to see.
Yeah.
You getting the education there, and then, going and, working in the various departments that you worked in JP Morgan. Was there something that maybe you experienced along the way that kind of drove you to the futures market? And then how did you go about, making that transition?
So yes, definitely. So I started like I would say 90% of most people that get into trading and investing, I started in equities. So I took part in fundamentals too. Like, so, started with Merck, blue chips, Merck, Intel. And I started, when, there was, stuff that was going on in the news, and the stock would get beaten down. I remember like BP, like back in like 2009, when they had the oil rig explosion in the middle of the Gulf, buying at a low, like, just, fundamental stuff. When, stuff would happen to a company and it would get beat down. With Merck, it was the Vioxx thing, where the Vioxx that they was releasing was causing people strokes. So I was basically trading and investing off of fundamentals. And it was the light bulb moment to me is when I just realized that, one, I didn't want to be in cubicle hell anymore. I was coming in, commuting from, and I didn't have a bad commute, man. I'm in Williamsburg, Brooklyn. I'm commuting and taking the M train to downtown Brooklyn. And it wasn't a bad commute, like a 15-minute train ride, one train, but it was just cubicle hell, man. And it was just like, I don't see, I sort of, they were putting a ceiling, on me. Like I couldn't get any higher. And then I left Brooklyn. So I started at Brooklyn Metro Tech. And then I went to corporate headquarters, 270 Park. That's when I started working in credit.
Park Ave.
Yeah, correct. And I just saw the ceiling. They wasn't going to let me get any higher. I was just bumping my head, learning different products, and ready to move on. Moving to collateral, understanding all the different products within fixed income, and I wasn't going to be able to elevate, to move up. And those people that came in with me, because they bring like junior analysts in droves, like especially like I came in with like about 5 Asian guys that graduated from NYU, and we all went our different routes. And I'm seeing that at the time I didn't take up golf. I wasn't I wasn't hitting up, weekends usually started on Thursday still, and hitting happy hours. I wasn't doing that. I was really like still trying to hone my craft on, learning different products and trading the financial markets. And I knew I wasn't going to be able to get any further. So now I was like, I'm going to have to make a pivot, because, I just saw they were just slow playing me. And I just saw myself not getting any further. And that's when I was like, you know what, I'm just going to have to, get out. Oh, I put my apps out to different company, MBIA, Deerfield, so different hedge funds. And I just wasn't getting no traction. So I was just like, yeah, I'm just going to have to go.
Yeah, no, it makes a lot of sense. So as you were making, that transition, what ways did you kind of actually get into the futures market? Like
Oh, yeah.
yeah.
So,
So
all right.
you talked
So,
about learning different product.
mhm.
What kind of drove you to the futures market?
Which
Yeah.
Okay, dope. So I was looking. So I remember this, man. I was at my Bloomberg. I was at JP, and I was, just analyzing the markets. And there was he was in a market middle office. He was in a market middle office. He supported a marketer. So his name was Robert Cook. And he was like, he saw me. He was just watching me, and he was like, saw what I was doing, and he was like, you just trade stocks. And we just was having a conversation. I was like, yeah, I trade stocks. And this is all. He was like, this is all you do. And this time I wasn't even trading options. I wasn't even into options or anything. I didn't know nothing about the Greeks, really, anything like that. And he was like, you basically you're hustling backwards. He was like, if you're day trading, you should be really, using less money to control more money, and you should be using a leveraged asset like futures. And I was like, futures. And then it just the wheels started spinning from there, man. Once he told me about futures, we had a conversation about it, and he told me about how diverse the market was, and I just went in all from there. Like, in terms of like, understanding the futures market, reaching out to people that were experts in the subject matter. I started working with, I reached out to one of my mentors, Steve Kalajian, who's in Danbury, Connecticut, has a fund in Danbury, Connecticut. One of my first mentors, and I just went in, and he got me to a certain point, and then still tight and cool with him, respect and appreciate the opportunity that Steve Kalajian gave me, and then just kept on seeking more and more mentorship for different aspects of my trading within futures, and continuing to trade equities, but just developing my craft and my skill set in trading, intraday trading and swing trading, and just kept on seeking mentorship.
Yeah. So throughout as you were seeking that mentorship, I guess I would say one question that I would have is, how many different places did you go to? Because I know we had that conversation before. How many different places did you go to, and also what was the cost that came with that as well too? Because I know you talked about that.
We talk about the cost of like blowing up accounts, and the cost of like travel and mentorship, everything. All right, so the cost, man, hundreds of thousands. Like, I would say probably, like, off the top of my head, for real, probably like anywhere between 150 and 175, to be honest with you. Yeah. In terms of travel and mentorship. So I've had individual mentors that, like, Sean Kim, market maker for Scott Trade, way back when Scott Trade was.
I know what you're talking about, Scott Trade.
So Sean Kim, like, he's in Jakarta right now. Still tight with him. So he's a guy that, time and sales, level 2 data. So, my price action stuff, being able to buy and sell off a level 2 data, time and sales. Todd Davis, you see me do Fibonacci's, level of expectancy. The list goes on, man. Jeff Manson. I've had like,
you've had a lot.
A lot. So, and also too, obviously I went to the school of Online Trading Academy, and that got me Online Trading Academy, which is a international institute academy, if you will. They have locations in the Middle East, they have locations in Canada, in the UK, and they have like 30 locations all throughout the country. So from a standpoint of OTA, because they have like a 60 instructor network, right? Initially got set up with OTA in Baltimore, which
Nice.
I'm at ISA. Matt Issa, and the owner of that center also owned the one down in Tyson's Corner in Virginia, Northern Virginia. So, through that, it was a great opportunity. But I initially saw them. In Cornelius, North Carolina, about an hour and a half away from Elon. That's when I first saw them, because I was looking at a commercial property in Cornelius, North Carolina, because that area was supposed to be growing. It's right outside the Lake Norman area. Mm-hmm. So I got hooked up. Just that education alone was $45,000. Just OTA, just 45,000. I got I wanted to go in because they covered everything, proactive investing, futures, Forex, options, stock market. So they covered everything in OTA. So I was just like, let me, I have it. Let me go ahead and get that. So when I did that, I traveled to me being from the Northeast, born and raised in New York. It was no problem. They had one center on Broadway. Right, not too far from Wall Street. They had one in Long Island. They had, Connecticut, and Philadelphia. But I got hooked up, in Philly, and city of brotherly love. But I got hooked up in Baltimore. So in my area, there was about 5-6 locations, OTA locations that I would have access to, that I would have, different instructors coming in that I would be able to, see, get the information that I was needing, that I was wanting. And again, that only got me so far. That was, and it wasn't even giving all of it, and that was okay. That was okay. I took from it what I could. Not to bad mouth from anything. At the end of the day, they are not in the business. They're not in the business of their students being successful. They're in the business of education. So, it's a situation of upselling and buying more. But me, I want to do this for myself and by myself. I want to do this. So I'm paying the premium up front, and let's go. But, hindsight being 2020 and finding out more and more as I traveled, I went to Wisconsin, I went to Arizona, I went to the center out in Irvine, California. Tampa, I lived in Florida, so I went to Fort Lauderdale, Tampa Bay, and it just, seeing different instructors, but it was only getting me so far, and they have live trading and everything, but it was so crazy to me, and it didn't dawn on me early in my trading. Like, I'm watching them trade live futures in front of thousands of people, like in their live trading rooms, and they're only trading one contract. They're only trading one contract. When we're talking about professional traders, instructors, and it's like, how are you going to scale or show people how to scale their business or scale their trading if you're only trading one contract? Their hook was, when you first get in, what they was advertising that you could trade our money, in their class, when you do their like 6-day class, that you could trade our money. But there's a short leash on that. And that's only within trading equities in the stock market. So, it only got you so far, and they're only giving you a piece of the information, a piece. So there's more to trading than, as we know, than just, entries and exits. You know what I mean?
Got you, for sure.
Yeah. Well, Jamil, you have a really dope story. Okay. And I hope everyone is really enjoying what they're learning right now, because this is awesome. But I do have a quick question for you. So can you provide a quick overview of the future stock market, and how does this differ from the traditional stock market?
So the future market is like, it's a 24-hour market. So it differs. That's one of the main differences right there. It's a 24-hour market. It's a global market. It opens on Sunday at 6 p.m. Eastern Standard Time. It closes at 5 o'clock Eastern Standard Time the following day. It closes just for an hour for mark to market, basically just so the registers can balance, because that's one of the beauties of trading the futures market, is that when you enter a position and close a position, whether it's, positive P&L or negative P&L, that money is available to you. Well, mainly, obviously, if it's positive, if you're up, that money is available to you that day. So you don't have to worry about a cash settlement. You can, wire or ACH transfer that money to your account. So it's a 24-hour market. It's a highly leveraged market. And there's extreme tax benefits with trading that market. So those are the main differences between the futures market and the stock market. The stock market being a 6.5-hour market.
Gotcha. Thank you. Well, then, so then quickly, Lawrence, I got a question for you. So do you prefer to actually use futures, or what is your preferred method in terms of trading?
Yeah, so great question. So for me, I'm primarily first and foremost a long-term investor. That's where I started.
Gotcha.
Secondary a trader, right? And I primarily do trade options, but I use the futures market, to be honest with you, is when people ask what my indicators are, right? What things that I use, the futures market is, I probably say top two, right?
Gotcha.
Indicators that I'm using, and the reason why is because the futures market is what Jamil would even, it is a leading indicator, right, of what's to come, right, what's to happen.
Mm-hmm.
So, for example, right now it's it's 8:23, right? Jamil mentioned that the futures market, it's open up, and I see some people in the comments as well talking about, it closes for 1 hour, right? It's open for 23 hours a day, but basically 24/7, right? And when you take a look at the futures market, right now here at 8 p.m., right, our market is closed. It closed at 4 p.m. EST, right? The regular, like you said, 6.5-hour market closed, pretty much at 4 p.m. EST. With the market that is actually open right now is the Australian market, right? The market that is open right now is the Australian market. It is now open up.
And Asia.
And the rest of the Asian markets will be opening up within the next 30 minutes. And some have already opened up. So you'll see that pretty much happening. So money's still moving and money's still flowing. So the reason why I like to pay attention to the futures market is because there may be something that could potentially happen overnight at times, right? Maybe there's an economic report that's happening in Australia or happening in Asia that people might be paying attention to, and traders may be making decisions and trades based upon that. That could be one thing, right? Or you never know, right? Sometimes there's things that's happening and could be announced at 8, 9, sometimes 10 p.m., right? For a company that's actually on the stock market, like maybe Apple. Like there's sometimes news can come out about Apple, right here at 8:30 at night, or about Tesla here at 9 p.m. at night, right? Or Boeing, right? There's been plenty of times where Boeing has announced certain news at 10 p.m. at night, right? And when we're talking about solid companies, right, that are actually top in the stock market, when we're thinking about an asset allocation, you think about the top names that are in the Dow. You look none other than United Health and Goldman Sachs as being some of those two top names. You look at, an Apple, a Microsoft, Google. You're taking a look at Tesla as being top names, in the NASDAQ and Amazon, right? And then you go and take a look at S&P 500, Apple, Microsoft, right? You're taking a look at these names. So when there's news that's dropped about these names in the futures market, you're going to see what they call an implied move.
Gotcha.
So that implied move is what the implied open is going to be when the market opens up. This is how much is of an estimate that, hey, the Dow futures is going to be up or down, right? It's giving you an implied open. And so that's why I say the futures market is really a great indicator for you to be able to see, what's happening, right? For example, today, the S&P 500 was down, right? And we'll get into more about that, and Jamil will talk about it. But the ES, right? The ES futures, they were down 30 points. That's equivalent to the SPY being down $3. So anytime I'm looking at the futures market, it's able to kind of just give me a guide to see, okay, how were traders actually, what levels were tested overnight, right? Because those levels may be tested when the market gets open again, right? So just to give you another example of how I would use the futures, right? So if I see that the futures market, like I said, if the ES is down 30 points, that's equivalent to $3, right? But let's say by the opening bell, the ES is only down 20 points. That would be equivalent to $2 on the SPY. Now, if I see that the ES then goes down 30 points again and breaks below that overnight low, right? Or if the market broke above an overnight high, that can give you that can give a trader edge to be able to see where price is going. So if I see that price broke below an overnight low, I can have belief that price is going to continue to move to the downside. Or if it broke above an overnight high, that gives me an idea that there was enough buyers to take that thing higher than that overnight high. So that just kind of gives people different examples of why I would use the futures market, even in the regular, like Jamil said, that 6.5 hour regular stock market to be traded. So yeah.
All right, thank you for that. That was dope. That was dope. Thank you.
That what you're saying, man, that goes straight into the question regarding pricing, man. Like he just gave a great articulation of how a trader can take advantage in the equities market using the futures. Because if you have a 6.5 hour market, and he's talking particularly maybe the SPY or even the Dow Jones, and price is trading, it's open, the market is 6.5 and price is trading into what is a gap. On the chart, on the equities chart, it looks like a gap, but on a futures chart, a 24-hour market or 23-hour market, there might be a key area to where there's willing buyers there. So when you're looking at a stock chart, price is stopping in the middle of a gap, but in the futures chart, on a futures chart, there is a desired willing buyers there where they're willing to buy that, and price will start to go up. So
yeah,
it's a great market to correlate.
You want to be able to show your screen, so because I know what you just said is like a really good illustration.
Sure. Can I do that? I'm actually
yeah. If you see a button named present, you see,
hold on a second.
See that in the middle, kind of like similar to that share on Zoom when we be on Zoom.
The bottom left.
Okay, let's do it. Let me turn on my end of the day data here. All right, so
we'll let them get set up, but definitely
present. Got it. All right, and then
this is dope. Look at this live sharing on. This is dope.
We'll let him, because I know he's saying a couple of things that probably
no, you're right about that.
Even what I said needs an illustration too.
I think so.
Entire screen, right? Entire screen, boom.
Yeah. So Jamil, while you're getting all of that set up, are there any other factors that affect the pricing for futures?
Yes. So I try to keep it simple for my mentees and students. The main thing that affects pricing is willing buyers and sellers. That's the main thing. Where the willing buyers are and where the willing sellers are. And then there are news events that non-farm payroll, unemployment, obviously Fed funds. There's news events that obviously affect price. So there but at the end of the day, price is going to stop and start where there's willing buyers and sellers in the market. And the other thing that affects pricing is emotions, like fear and greed. Those. Let's have it. I don't know if it's allowing me to share. It's not. I went to window, and entire screen. It's not giving me the blue button. Do you have to give me permission? It's not good. Isn't the blue button for the share is not. It's not lit up.
Hold on one second.
So
on my side. Hold on one second, bro.
Well, in the meantime, Jamil, I have a ton of questions that I'll ask you. Okay,
all
this set up. Okay, we can move this train moving along, Lawrence. So, all right. So another question I have is, so what? Like I would say, so how do future contracts impact the overall economy?
Futures contracts, how they impact the overall economy. So the overall economy and the market, I would say futures contracts, the biggest effect is like the third week of the third week of the last month of the quarter. So you have all contracts have to roll over. So primarily I trade the equity indices. And so that's the futures of the S&P 500, the futures of the Dow, the futures of the NASDAQ. And those contracts expire quarterly. and they expire the third Friday of the third week of the third month of the quarter, right? So that week is also the most trade on with the option chain with options. That's the most traded option that Friday. So you have weekly options expiring, and you have those monthly options that's expiring that third Friday of the month. So when you have that much money moving, because the contracts roll over with the equity futures, they're cash settled. So after that third week of the month, like they'll cash settle, the contract doesn't move anymore. So when you have that much money and that many contracts expiring, that's going to cause a lot of volatility in the market. Globally, global market, absolutely.
All those expirations happening at one time.
Yeah.
Absolutely.
Did you when you hit present, was it you said it's not allowed? When you hit present, did you hit share screen?
Correct. So I'll go to present right here, and then I go to share screen at the bottom, slides, video file, share screen, and then I go to share screen, and then it says at the top, entire screen, window, and Microsoft Edge tab, and it's not highlighted blue where it says share and cancel. It's not. I can't click on it.
Click on your screen first, like where it says entire screen. Click on that box that's showing your screen.
Yeah, I clicked on it.
Click the box, and did the blue light up?
It didn't. And then I tried window, it didn't light up. And I'm also trying Microsoft tab, and it's not lit up.
Okay. Yeah. I'm not sure why it's doing that. For me, it was allowing me.
And then I did also click I clicked the box for share or system audio. It's not allowing me to.
Okay.
Well, then do you think you can share it, Lawrence, maybe from your end?
I don't have the Ninja Trader.
Gotcha. Never mind. I didn't ask that question.
Let me see.
But I could pull up the futures on my trading if you want.
Sure. It's sure. Pull up trading view.
I won't be able to pull up Ninja Trader though, but I can pull up the trading view.
There's not you. Is there something that you could give me? Is you giving me permission, right? You just got to give me. Is it like Zoom? You could just give me permission to share my.
Nah, I don't think so.
No, this isn't like that one.
Okay.
No, StreamYard.
Yeah. So I was looking. All right, cool. So we'll come to the future.
And let me while you're doing that, I'm gonna look to see just pull it up so I could go to a day that we could discuss it.
You should be able to see my screen now, right? Everybody can see.
We can see it.
Yep. So Jamil, I pulled up the ES for you, the ES mini futures. I guess just let me know where you want to go to.
Yeah, I'm gonna look right now. Hold on one second. I'm looking at March 6. Boom, March 6. I'm gonna do something real quick right here. And I just want to go to this for time purposes, March 6.
Okay. What time frame you want me on?
All right. So hold on. It went there as high as right there. March 6. So that's March 6. That's boom. And we're going right into this area right here. So we go into March 6. Let's go to March 6.
Okay, I'm on March 6. I got
March 6. Perfect. On the spy. No, go to March 6 on the spy on the daily first, right? Yeah.
On the daily first.
Perfect. So we can see. This is the first example I saw right here.
All right, here you go. I'm on March 6.
That's March 6, right? Okay, so
yep.
Hold on, you're on the futures.
Yeah, I'm
the
on
spy. Go to the spy.
All right,
cool. Be able to see it. Yep. Go to the spy. All right. So that right there, that March 6, that's a gap right there to the left, right? So you see how so March 6, you have the March 6 trading right there, right? But that's a red candle because price rallied up. You could see as high as price went, right? Price went as high as, let me see. I'm looking at your screen. I'm looking at my screen. 406. Right?
All
right. So, but now that's a gap though, right? The price went as high as 406, but that to the left of that candle is a gap, right?
Correct.
Price went as high as no, it says 406, 407. Okay, but there's a gap right over there to the left. Now, if you go to the ES futures chart, to whether it be a 10-minute or a 15-minute time frame, you are going to see the price pattern that push price down at that gap.
You said what day? You said March 11th, right?
So March 6th was
March
6th.
6th. March 6th.
Yeah, March 6th. March 6th was the when price rallied up, but the level that it happened at, that was from February 19th.
Okay.
Yeah.
So February 19th.
Correct. So you see how price rallied up early, or what was that? Early in the morning, right? How price rallied, that was like 10 o'clock, 10 o'clock, 10:30. No, it's like around 11:30, right? Where price rallied up on the 6th.
Oh, on the 6th. Okay, I thought you told me to go back. Yeah, on the 6th. Let's go. So yes, if we're looking at the 6th, it's about 10. Looks like about 10:30. This
Okay.
rally from 10.
So price is just consolidating. So price is just consolidating and trading sideways. But that level, there's nothing to the left on the SPY, right? There's nothing. We already saw it. It's a gap. It's a gap on the SPY, right?
Correct.
But to the left on the February 19th, there's a level right there to be short. Right there, that's one of the pins to the market that I really like. It's a drop based drop right there. What at 40?
Wow.
That high was
on a Sunday. This will look a Sunday into Monday on the 19th.
correct. So
that's hot. This was like 409, pretty much.
Yes.
Yeah, 408.75, basically 409 on the E-mini.
Exactly. So you see what was that? It was actually the 16th. So you have that drop base drop, a retest of it. So here it is right here. So you see, go a little. What time frame you on? You're on a 15-minute time frame. All right, cool.
Now I'm on the 16th, right?
On the 16th, correct.
Oh, yep. Okay.
So you see that go a little bit more over to your left, right there.
Right here. You're talking about here at 3 p.m.
No, right there. Hold on. Let me get it.
At 3 p.m. on the 16th.
On the 16th, exactly, right there. I'm gonna pull it up on my. So go exactly at 1900. We'll go over the whole price action. 1900 on the 16th. So basically 7. Yeah. So
the 16th. Oh, 1900. Hold on, my bad. 1900 on the 16th.
Correct. 7 o'clock on the 16th.
There you go. There you go.
All right. So that price action right there, and then you see how those wicks come back there, and then it just sells off right there. When price comes back to that area, that is a supply zone. There's more sellers than buyers there at that area. So this is the futures market, and there's nothing there on the SPY, but that level exists there on the futures market. So this is how you could use the futures market to correlate it with the equities market. That price pattern and that price action, just that drop, that extreme drop away in the overnight. There is no willing buyers there pushing this market up. Price drops down. When price comes back there on March 6th, it trades sideways for 30, like an hour, and then it drops away.
Even if we're looking at, I just slid over to current present time now here on April 10th. Even if you look at it from this standpoint, right? You're looking here at on the spot on the not spot the E-mini right here. On the 15, I'm on the 15-minute time frame on the S&P 500 E-mini, and you're taking a look. If you look the past couple of sessions, If you look on Wednesday, April 5th, Thursday, April 6th, and then if you look today here, Monday, at 10 a.m. here, right around 10 a.m., 10:15. And I was actually speaking earlier on this today. If you look, pricing, this is equivalent for the E-mini futures. The SPY was sitting kind of right at 406.
Mm-hmm.
And then if you take a look as well at the QQQ, it was sitting right at 313. And it literally just, it came right out of this demand zone. So there was a bunch of demand that was sitting right here at this level. And what I was telling people, was talking to people about, was like, hey, in the futures market, a lot of times you can see, where not only, there's just buyers and sellers, but also, what was that previous week's low? That was one
Mm-hmm.
thing that I talked about, right? Like if you take a look at this was pretty much last week's low where we were at today. So either one or two things was going to happen. Either we were going to break below last week's low and continue to pull down and drop more, or we were going to see a rally and buyers were going to step back in. And that's kind of exactly what you saw here.
That's exactly what happened.
Yeah.
Exactly. If you could, to make it for the audience, man, put March 6th, put a horizontal line so that they could look over to the left in the futures market. If you could, March 6th, that high, put a horizontal line on March 6th, and then just go over to the left. So the high right there. Exactly. And now just go over to the left right there. And that's the price action that we're talking about right there at 1700. That little base drop price pulls back there. Yes. Right there. That price action right there. Correct. And then just price selling off. And once price gets back there on March 6th, it just drops away. It trades sideways and then drops away. But again, if you're using this to correlate it with the equities market, the SPY, this is what this is for. You have that level. You see this drop in price that happened in February. You see price, rallying up. It's a gap on the SPY, and that's how you correlate the markets. Because also too that level is in the overnight. That level is overnight, and that the origin of that move is in the overnight when the U.S. market is closed.
Okay. All right. So I have a quick question for you and Lawrence. So can y'all discuss any trends that you're seeing in the futures market and how this may impact investors for the future?
Great question.
That's a great question.
That's a great question. I guess I'll start off with it.
Go for it.
I guess I would say one of the trends that I guess if just keeping that, I guess more on a recent basis, what kind of some of the things that we've seen. For one, there's been extreme, what we will highlight, not just in the futures market, but kind of, I think, all around, it's just like extreme low volume, right? And I think a lot of it has to do, like, even like, for example, when you're talking about the futures market, if you pretty much take a look at, we'll just say since the beginning of April, if you really think about it, if you're just looking at a chart, just even from a naked eye perspective, right? The market hasn't really went anywhere so far this month or over the past 2-3 weeks, right? We've kind of been in the same area, the same levels, trading in the same levels. Unlike pretty much the end of March, the market kind of really went on a rally. So I guess I would say most recently, the market has definitely been more choppy, and even just this year, right? If we even to go outside the 15-minute time frame, if we just even go to the daily where every candle is going to be a day, if you're taking a look at things, even we'll not even just say this year. If you think about it, since last May, what really has not just the futures market, but just the overall markets really done? You look at this is really what I would call a ping pong table, playing back and forth in between levels. So, right, there's been certain stocks that have broken out, right? And for example, names like a Nvidia, which is, up, all the way from 110, rally back and, ran back. I think today it closed at like 275, right? Even a name like Tesla is way off a 52-week low. So even while there's been certain stocks that, have either went up 100% or 70 or 80% from their lows, the major part, like the actual indices, have actually just kind of sat and still traded sideways. So looking at that, I think one of the number one trends is, market kind of has definitely just kind of been taking it's had its turns, right? Where, you'll see that you saw this nice run in January to kind of start off the year. Then you saw a little bit of downside, and then you're seeing a nice run running into earnings season here. So, that's some of the trends that I've personally seen, just from looking at the markets from an overall perspective and the futures market. Then you ask the question is just as far as impact. I think as well, the impact, I just think that right now, the market trading sideways, and then also a lot of tickers trading sideways. I think the impact that it does, I think right now, investors are having a lot of time. I think we're having a lot of time extended to be able to actually get invested in the companies that we want to be invested in, to be honest. I know there's a lot of different companies that are just trading sideways, right? Whether it be PANW, Palo Alto Network, or Snowflake, right? Or you're just seeing a lot of companies and tickers, even some of the companies, even like a Tesla. I mean, this came up, but it's still, in my opinion, it's still kind of trading within the same levels within the past 6 to 12 months. It's still in the same zone. So I think overall the trends that I'm just seeing from the market is that the market is really just, it's waiting for, I won't say a overhang like there's a bunch, but I just think the market is really waiting to take back off. Right now, I think it's just in a charge up phase where, there's some things that are being figured out. You're kind of seeing the inflation. You're kind of seeing those narratives kind of die down. And I always tell people that, narratives never last forever. The market always kind of picks up a different narrative, right? If you notice, last month it was the banks, right? You don't even hear anything much about the bank, whatever. You don't really hear anything much about that anymore, So I just look at it that way, when it comes to like trends and stuff like that. But those would be some things that I would just point out, so far, and I'll let Jamil take back over.
Gotcha.
So in terms of trends, like if you could, because I'm gonna show something on your chart for this you pull that back up if you could, real quick. I just want to show something on your ES futures for the daily. I think right now it's just like, in terms of day trading, this is really like the arena for day trading, like identifying key areas for intraday to be long and short in the market, because like there aren't any continued moves. There's just no there's no trending moves. Like I was swing trading the futures market in like 2020, 2021. And there just isn't any continued moves. And I will say this, I would think that, talking to other traders and my mentors and things of that nature, since the introduction of the micros, the micros came into existence in like April of 2020. And the micro contracts, they existed for the commodities, but for the equity indices, it's like it's another hedging tool. It's another yes, you could use it to speculate on the market, but you could use it also to hedge positions. And I think obviously with a new product, micros coming in, that is bringing potentially more buyers and sellers, more retail buyers and sellers into the market. And this is things that come into the market, new products that come into the market. It's not for the public. It's not for the public and retail traders to make money. You know what I mean? It's to actually quite the opposite, to take their money. So you have a lower barrier of entry and more volatility. So you're seeing price like go down to the extremes, like go down to the previous day low, and first rally in the first 30 minutes of the session, then go down to the previous day low, then rally up. It's a lot of volatility, it's a lot of swings in the market, but there's no continued moves. It's just the extremes. It's perfect for Lawrence's strategy of selling out of money, selling cover calls, and staying out of the money, just staying out of the way. But if you understand, extremes, you understand, price recognition, there's opportunities from a day trading perspective. But like right now, to answer your question in terms of the trends, it's just volatility and just staying at the extremes for low risk, high reward opportunities. But like being in the middle, you're gonna get chopped up, you're gonna get hurt.
Oh, okay. So I'm really excited that you both shared and really elaborated on that, because I've never traded in futures. So this is all lessons to me. So we all appreciate it. Okay. Now, the question that I'm also now curious to find out is, I just wonder, like, how do you all see it evolving in the next 5 to 10 years? Like futures, because this is just very interesting. I'm just really intrigued by this whole thing. That's all. So
yeah. I think
go ahead.
I think that personally, I think that futures. Okay, first of all, from a standpoint of this, I think futures is just going to be growing because from a day trading perspective, from a day trading and from a swing perspective, like the barrier of entry, it's a lot less money to trade futures. And again, like I talked about, it's you get the tax benefits of it. It's not the market I trade, obviously it's the most liquid market. It's the S&P 500. However, you do have the NASDAQ and the Dow Jones, which provides, daily the swings. It provides opportunity, because in order to make money in the market, whether you're short or long, your price has to move. And in the futures market, that's what it gives you. It gives you price movement, So I think that from a standpoint of, you could trade Bitcoin futures now. I think that it's going to, to answer your question, for the next 5 to 10 years, I think that the market is just going to grow because, one, the lower barrier of entry. I just mentioned that they introduced 2 years ago the micros, which is a tenth of an E-mini, which is another lower barrier entry. And you have all these proprietary firms that are coming up that are giving people the opportunity to prove themselves through an evaluation period, a combine period, to trade the futures market so that they can earn a funded account. I've seen that, like, in this space right now, there was maybe like 1 or 2 companies, like Top Step Trader, where you can go through a 2-step combine where you can prove to be profitable, and they would fund you an account. So basically it will work like this. You pay $200 a month to show that you can make $6,000 2 times, which is a total of $12,000. And then they would fund you a $50,000 account. You have like so many companies like this now. Yes. So
it's grown
immensely. So to your question, that's a great question. I just think that, and it's futures. It's mostly futures because it's for day trading. That's
awesome.
They do have some stock. Have some stock, but most of the
futures.
Mainly futures, and most of the proprietary firms that I know here in New York, like physical ones, is where you have to put up, like, for instance, you have to put up 15,000, and they'll put up 50,000, so you can have that margin, so you can have that extra buying power. But this is totally different because of the ability of the futures. So I think that it's gonna, in the next 5 to 10 years, it's only gonna grow. It's only gonna get bigger. Like I said, you could trade crypto futures now.
Yep. Yeah, I think for me the answer would be kind of similar to Jamil's. Just like I see the space expanding just because of things like, even he mentioned crypto, but I think there will be more things that are added to the futures market that end up being traded. And I just think that the way that the world is moving to, it's kind of just like, if you think about it, like how would I say this, like corn and wheat futures, like even things like that, like certain commodities, like the futures. I think the futures market, and then Jamil could probably explain a lot more the origins as well too. But if you just take a look, if we even just think about what were some of the first things that were actually traded, right? When we go back to even even that conversation, a lot of people don't understand this, but Black people were actually the first people that was actually ever traded on markets, right? When we think about that, right? And then when you think about the futures market, when you're thinking about crops, minerals, things like that being traded, on the futures market. But now you're then talking about, then you're also thinking about now, adding things like crypto, and then adding other things being, traded on the futures market. I just see it growing. So I think definitely, it's a growing space. And then the access, right? Even if you think about the access has changed even to a brokerage account over the past 5 to 10 years, right? When you think about right now, you can get a brokerage account pretty much with little to no fees. That wasn't the case even 10 years ago, right? It was, Jamil mentioned things like Scott trades and just different things like that. You know what I'm saying? Like everywhere was charging 14.95, a commission. So I just think there's a lot of room for, the space to really grow. So I think I think the interest is growing too. If you think about it as well too, I think the interest is growing too. Anytime interest grows, I think accessibility grows as well too. And
absolutely.
Yeah. So now, Jamil, I think I have a few more questions for you. I know this was like kind of like, this understanding the futures market with you. Asymmetry, could you break that down for us?
Asymmetry, yes. So first of all, to know asymmetry is good. We have to know what symmetry is. Symmetry is parallel, 1-to-1. And I think whenever you are trading or investing in anything, when it comes to risk, you should try to be asymmetric at a minimum of 3-to-1. You want to be able to risk, be in a position where you could risk $1 to make $3, because that allows you to, no one knows there's no black box to the market. And no one knows, like, whether you're investing in real estate, whether you're going to flip a car, no one really knows the future, like 100%. We don't know what's going to happen. So what we are in control of is how much we're willing to expose, how much we're willing to risk, how much we're willing to put up. And whether that's $1 or $100, you want to be able to risk $1 to make $3, because that would mean that you could be 30% right on your investments or trades and still be profitable. So you could be wrong 7 out of 10 times and still be profitable. Because if I'm right 3 times, risking $1 to make 3, if I'm right 3 times, that's 9.
Yeah.
If I'm wrong 7 times, I'm down 7.
Yeah.
So that's asymmetry. Being able to not be right and still be profitable, still be net profitable, minus plus or minus commissions and everything. And I got put on to that by one of my mentors who actually worked for Paul Tudor Jones. He was minimum 5-to-1, risking $1 to make 5, where you could be 20% right and still be profitable. So that's where I through my evolution of trading.
Nah, definitely, bro.
Evolution of trading, where you would like to be, and even from a standpoint of you trading on a bigger time frames, daily and weekly, you could still do that.
Yeah. So what? So I guess I would probably say I'll turn it over to TR. You got any more questions for him?
Yeah, well, I was just curious to listen, Jamil. You mentioned something about tax write-offs earlier, and I need you to elaborate a little bit more on that if you can. So,
all right, man. Let me. You know what? Let me get the form. You know what? You might want to share this form. You know what? Let's get the form.
Let's do it.
Let's do the form. Let's do the form. So, and we could go to.
And then while you pull it up, I can ask another question. Lawrence, I always have questions.
Here it is.
Okay. Oh, never mind. Go ahead.
We're good. So let's do it. Lawrence, this is the form right here, right? So it's the IRS form is 60. You could Google form 6781.
Hold on. You said IRS form 6781?
Correct. Section 1256.
IRS 60 form 81.
Yeah, and it's the form, it's the section 1256.
Section 1256. Hold on.
Yeah.
Let's see. Hold on.
This is the one benefit, man. This is the beauty of trading futures.
Let me see. You said it was the form, right?
Yep, it's form IRS form. You could go to irs.gov, but it's form.
It took me to irs.gov.
Yep, form 6781. Form 6781.
Okay, 6781. Perfect. That's why I was wrong. 6481s. Gains and losses.
Correct.
And you said sections 1256, right?
Yeah, weird, because it says 1256 at the top, right? And if you
contracts mark to market. Yep.
Yes. That's it. That's it. So if you go down, so the beauty of trading the futures market is you have a tax advantage of a 60-40 split. So to make it really simple, if you make $100,000 trading, right, 40% is that 40,000 of that is going to be at a short term right here. So this right here is strictly for futures traders, this form right here. So you see that short-term capital right there gain. So again, to make it really simple, you make 100,000 in a year, 40,000 of that is going to be taxed at 40%, 60,000 is going to be taxed at long-term. So that's the tax advantage of trading futures contracts, because it's based on, what Lawrence touched about earlier, the history of futures contracts, where it derived from. This was for farmers back in the day. This is what futures contracts was really for. It evolved into electronically trading, but this is like the commitment to buy or sell a futures contract, in the future, and
it was a prediction based upon how crops would grow.
Exactly. Derived from the Dust Bowl, when all the sharecroppers and the farmers, lost their crops and they needed the seed money.
Exactly, the seed money. Yep.
Exactly. So this is what you would have your accountant fill out for your taxes. So obviously with equities, it's a totally different tax bracket and tax percentage.
Okay, thank you. Thank you. Okay. No, that's pretty dope, y'all. And this is also a friendly reminder. Please do your taxes. It's due April 18th for the United States. Just throwing it out there next Tuesday. So
National Tax Day.
18th. Yeah. Wow.
Yep.
No, that's awesome. Well, thank you so much, Jamil.
Yeah, so Jamil, kind of to wrap up here, really just wanted to say, first off, thank you for coming on. Definitely, I think we'll be having you on and our other couple guys on with you next time as well too, down in the near future. But and that word future.
no pun intended. No pun intended. No pun intended.
No pun intended whatsoever.
All pun intended.
Yeah, but nah, I think there's always things to learn, man. And I think you always got to be kind of really just an open book, man. And I think, for me, myself, learning a lot from you, because I was using a few, like I said, I explained, I think very well earlier in this episode of just the strategy and how I use the futures market, but just even talking to you, learning more, just seeing different things, always good to see things from a different scope.
Yeah.
But it's futures market. I mean, like I said, it's so instrumental, and I think everyone should be paying attention to it. Whether they're trading it or not, even if you're just a regular, maybe long-term investor, right? Absolutely. Or someone that might just be, trading options or just, trading shares, trading equities, right? I think the futures market is, I mean, like I said, I think it's a top two indicator, right? When it comes to trading, in my opinion, it's a top two indicator. So yeah,
absolutely. It's just, and it's extremely diverse. So like, in my opinion, why would I trade the spot Forex market when I could trade this Forex market through the futures market? If I'm trading gold, if I'm trading oil, or a sector, or a sector of energy, an energy sector. You could look at the futures for an advantage, for an edge, and or protection, because that's really also too what it's used for. Like I said, you could speculate and make money because it has a lot of range and it has a lot of opportunities, but primarily institutions, hedge funds, banks, companies, they care about their risk, they care about their bottom line. So if you have a market that where you're exposed, and you have money on the books, you got to be, and something happen and the market is closed, you can't get out of a position, you can't get out of your options, right? You have to be long short the futures market to be able to hedge those positions.
Yep. Yes, sir.
So just it's a extremely diverse.
I think it gives you a lot of tools in the belt. You feel me?
Yes.
And it's there, and especially even when you think about this now, especially because the stock, let me say this, the stock market, while it's trading sideways, like when we take a look back to 2020, there was a lot of stocks that were like pretty much a lot of stocks across the board were moving up and down every single day, right? Where even like a Roku or a Square, Alibaba, these just different names, just throwing out different names. Those names were moving every single day, up or down, 2 to 5%, bottom line. Whereas like those names in that category in the smaller growth space, they still move, but it might happen once a week, right? Or maybe once every 2 weeks now, where they might have a nice little 5% day or 10% day here and there, right? And you're not seeing a lot of big swings in a lot of these equities, right? You're not seeing really any of those type swings. So I think, like I said, just diversifying your playbook super important. I always compare a lot of things to football or to sports.
Me
But
too.
but it's like, I think that the way that the market is set up right now, and this is just my opinion, it's like you have a go-to wide receiver, but the wide receiver is double covered, and you just can't get him the ball right now. So you have to be willing to go to that third or fourth option and hit them to be able to kind of like be on point, I think, right now. Like you got like, that slant was working, but now you might have to be having to pivot, right? You might have to do something else. You might have to use another instrument, right? To Jamil's point, diversity, right? Having another option. I think that's what, as a quarterback, your job is not to just be able to hit your first or second read, but sometimes you're going to have to go to that third or fourth read. And honestly, a quarterback hitting their third or fourth read is what separates, honestly, the bad, the good to the great. So that, that's the reality. Yeah.
No,
and those quarterbacks that take the sack and live to fight another down. Sometimes you just gotta take that stop out, and to live to fight to put on another trade. You don't move the stop or do dollar cost averaging. You just eat it.
Yeah.
Because like you was talking about, if you trading asymmetrically, it's just the sample size. It's just one of many trades.
No, true that. Well, Jamil, we really appreciate you. And I just want to ask one more question. If you could share any resources with the audience, meaning for anyone that really wants to get started this week, right? Trading futures, please feel free to share with us. So go ahead.
All right. So I would recommend first and foremost start with CMEgroup.com, so that you could see it's the world's Chicago Mercantile Exchange, where most of the futures are traded. Gold is traded on the NYMEX, so that you could see how diverse the derivative market is. The futures, there are derivatives just like options. They derive their price from the cash market, which is in my case, I trade the ES, it derives its price from the SPY. And my website, asymmetrytrading.com. In terms of trading, I have a free ebook that anyone can if they are trying to figure out their journey for whether scalping, intraday trading, proactive investing, swing trading, it's a free ebook that easy read that help them get started on their knowledge and where they want to be within the futures market.
Yes, sir. Nah, I appreciate that. Appreciate
Thank
those
you,
resources.
Jamil.
Yes, sir. So we want to say thank you. Me and TR say thank you to you guys tapping in here with us tonight. Thank you once again to Jamil. And you guys know tomorrow, man, our good brother Mark Monroe, he takes over on Tuesday night. So here at the Come Up series, man, you know, we got more than obviously, you know, we've added, you know, a few shows, you know, coming in. We got our brother Christopher Bush. We got, you know, our queen Abby Joseph. You know, we also got Mark and Mo, you know, and we, you know, just got a lot more things coming here at the Come Up series. And a lot of people put in a lot of work behind the scenes, sometimes that you don't see. We got our boy Vic in the back, you know, all that stuff down. So, just super appreciative, man. Appreciate all the loves to all the cousins. Some of, you know, a lot of you guys sent different gifts and various things to me. So want to share that appreciation and, you know, say thank you to you guys. Some attended the wedding. So definitely want to say thank you as well. So, you know, we appreciate you guys here, man. You know, we understand, you know, the information you guys are taking out. I think, you know, this YouTube channel, I mean, you know, just so much, right? You know, so many different things. I mean, and hell, you know, we're on pretty much every day of the week. So it's literally like, you know, at the end of the day, it's literally what you're able to learn on this channel. I just believe like all of this stuff, you just take it in real life and you're just able to go conquer the world. So, you know, super, you know, special shout out to, you know, our good brother Mark, man. I mean, he started something pretty special here, and you know, appreciate Tiara. You know, I think you guys will be hearing a lot more from her about the job market updates in the next few weeks. And you guys will see Jamil again. You guys have seen me and Jamil, you know, in different cities. We've probably been to your city before and, you know, taught, done various things. So, you know, it's just a good vibe, man, to, you know, be on here, be in a space, you know, where, you know, we're of appreciation, right? And, you know, we're here in this world, you know, only for a limited amount of time. So you got to be grateful. Every day is an opportunity to go out there and get better. And
yes, well, pause. You thanking everyone, but we need to thank you too. So let's not even do that.
Exactly, okay? Man. I was gonna say, man, thank you.
Right. Come on now.
Thank you, Mark, man. I haven't met him personally, but man, going back to when I first came across him at SummerSlam and listening to him, super talented and sharp brother. Can't wait to see him, you know, whether it be on the East Coast or West Coast, man. Can't wait to meet him and talk to him. You know, it's been great to just see your evolution, Panther, you know, and we're doing great things with this channel, man. It's super awesome. Thank you for having me, you know, just to see the growth and evolution that you have with just, you know, in your personally, and, you know, in your profession and in your craft, and with this right here, and your collaboration and work with Mark, man. I remember when you was telling me you was meeting up with him in New York. It's been great. And Tiara is such a pleasure and delight to meet you out in Texas. And I'm super glad that you're plugged in and that you're gonna be, you know, you're from Philly, you know.
Oh my gosh, we have this like long battle.
You know, you're an Eagles fan.
He's a Giants fan. Here we go. You
know, Philadelphia fans are some of the rudest fans, fans in the country. But you know, I rock with you though. I rock with you.
I didn't say anything rude to you this week. Okay, we just started.
Oh man, it's just like such an oxymoron, city of brotherly love, man. When it comes to
why is she like this? This is the side you don't see it, Jamil. Okay.
Oh, man.
Well, nah, man. We, like I said, once again, man, super appreciative. Everyone have a blessed night, and we'll see you guys next Monday, man. Peace out.
Thank you. Have a great week, y'all. Bye.
Thank you.